All right, good afternoon, everybody. Welcome to this emergency webinar, which is being held, as we can see, on the 11th of March 2019, and we're currently at 17:03 UK time, just gone past the London fix. We're going to start with the trade that I'm currently in at the moment. We'll explain it all to you, which came in through our alert service, tradingthemarkets.com, which we relaunched over the weekend, and we really can see very clearly why here we've gone long. Now this on the 30-minute chart happened this morning as I got up, and we can see here it's a reversal over 2 bars. Now that's a very serious sign of strength, and we'll go and examine it. Now I'm going to talk today with Gregory and Philip about another principle, which is one that we look for shorting the market, and it actually happened at Brexit, and it's called a trap up move. And the reason I'm going to be focusing on it over the next couple of weeks in the alert service is because Brexit is going to drive the GBP USD, the Euro USD, the Swissy USD, which I'm on right now. And what you're seeing at the moment on the Swissy is a lot of testing and rallying in the market. Now you can see here on this screen that I've got my scanner, and you can see I'm long from this point. The stop's now into profit, so I'm not going to lose any money here. It's up about 136 pips so far. Now we had a big move at the London fix, as you can see, which is why I stayed long. Now there's a little bit of weakness that's appeared. You can see this red indicator has knocked the market sideways. We're back into that area, but the stop's going to stay there. I'm not going to do anything with it. And we can see that because of that weakness, the scanner's starting to turn negative. Now that's very common. When you're long, if you start to see signs of weakness on these time frames, then you'll find that the 1-minute chart will turn first. Then the 5-minute, I use 2, 3, 4, 5 as well. These will all start to turn red if this is weak. Now, what am I looking for right now to stay with this? Okay, it's a test. And I'm hoping I can show you it live. Because if we can, now let me just be clear on this. I'm using my, let's close this, my FX Choice Pro Hedge account here. This is the live account. All right, and you can see here that we've gone long because everything here in the medium-term trending system turned green after these 2 signs of strength appears. And I want to actually explain these two to you because these will mark a bottom. So first of all, we get very high volume coming in on the down move. Massive spread closing off the low of the bar. But what happens on the next bar is the clue that the market here is being shaken out, ready for an up move. We can see that the previous support level was here. They mark it down, and then they're devious, these smart money traders, the bottom reversal. A very serious sign of strength, and one we look for in stocks, we look for in futures, we look for in Forex. This is driving price up. Now, once that happened, I marked the top of that bar and waited for the market to turn green to tell me that we're in bullish territory. Now, as we know that we're in bullish territory, the software does the work for me. I don't need to do anything. I just watch what this medium-term and short-term trending system is telling me. We only actually had a few areas where the market got congested in here, but then it broke out to the upside because of the reversal bar. Now, a bottom reversal on a time frame like a 5-minute chart is obviously a serious sign of strength, but also we had other indications on the 30-minute time frame, which I'll show you, and it was here. This is what's driving the price. The bigger the time frame that you see the principles arrive in, the bigger the move is going to happen. So I always start my day by looking at the biggest time frames first, and then I zero down to the small time frames for my entries. So keep in mind a very important lesson. You must start by looking at the big time frames first and not the small ones, because the small ones are what we call they get choppy. The bigger time frame drives price.
Sign of strength has arrived.
And now we've got several coming in. Now look, the pound Swissy again as another alert, and the US dollar Swissy. So both of these we can see are telling me, and again the pound US dollar. All of these are giving alerts to the long side right now. But because it's after the London fix, I'm not going to take any other trades today. I will be sending alerts out tomorrow in the new Trading the Market service. Now, I'll talk about that because we had loads of questions. I'll cover all of that as we go through today's seminar. So let's go to the 30-minute price bar here. Now I'm using MT5 with, in this particular platform is FX Choice. And I'll go to the 15-minute chart first. And you can see as we go to the 15-minute chart, we get the same setup. If we look over here, stopping volume. Okay, so look at the volume, massive, the highest we've seen. And that's very, very important because that price bar, and in fact, I don't even need to use another time frame, you'll see it very clearly here, that the market's marked down on a massive volume bar, but it closes almost near the middle with the next bar up. So this is point A, the start of the accumulation phase. But I would never go long on this price bar. Can anyone tell me why? Let's ask some questions here. Can anyone tell me why, based on VSA, I would not go long on that bar? See if anyone can get it. Why would you definitely not go long, even though it's a green indicator, on that price bar? Yeah, I tell you what, a lot of you have got this. It's very encouraging. There's something you've all got to learn here, and it's vital to your analysis. When that bar appears, and it's the highest volume we've seen for a long, long time, here's what I do, and this is what you should do. You mark the top of the bar. And in fact, in Smart Center Pro, it does it automatically in our software, because it sees that. Now, look how long it took for the market to break the top of that bar. If you're trying to trade in here, you're going to lose your account. You're going to be done. You're going to blow up the account because that is no directional trade. What we need to see is effort with a confirmed result. Now, I want you to imagine, okay, that this here, this line, and I'll put a line here across the top of it as well, is a river, a creek, if you like. They call it a creek in America. I'm going to call it a mini stream. And I want you to imagine that this is energy of the human being, okay, energy. All right, now, in order for, I'll give you the analogy that was used by Bob Evans that took over the Wyckoff school. And if you look at what Bob Evans said, he said, in order for price to push above areas of resistance, it needs energy, kinetic energy. And that energy is seen in the volume and the price, where the price closes. So imagine if you're a Boy Scout and you've seen this river and you need to get across it to get home or to get your cup of tea, whatever it is. So you try here, you see, so you take a run up to the creek, you run, you run out of energy, and there's no energy, there's no volume here. Okay, no volume at all. So you come back, you take a further 20 steps back, you try again, no, so you're going to have to take 50 steps back. Now you're going to start running and you're going to build the energy. You're going to build the energy to push and jump that creek. Now look at the energy that's created on these two bars. Mark down bar, and the next bar pushes and closes on the top. So does that one. That is the energy required to jump the creek. So the Boy Scout manages to get across the creek, and then he takes off to the upside. Hence, my trade was a jump the creek trade. And it was based on a smaller time frame, a test in a rising market. Now, we're talking at the moment about a long trade, and yet I've got everyone in the seminar to talk about shorts. Goes to show you, in each market, you can short and go long, depending, of course, on what instruments you're trading. Because instruments are arbitraged, and if the gold market is weak, you'd expect the dollar to strengthen. And if the Japanese yen starts to weaken, you'd expect the dollar to strengthen. So all of these things, on all of these instruments, you can be short in one instrument because you know it's weak, and you'll see another instrument like today here in the Swissy, which was clearly in an uptrend, in an upward movement. Now I'm going to talk today about stocks and Forex. I'm not going to focus so much on futures because the stock market drives the future, as we know, and there's some very interesting principles that we're going to talk about. Now, the one we're going to talk about today is the trap up move, and it's one that is a very serious sign of weakness when it appears and it's confirmed. So let me bring in Philip here. Philip, welcome to the seminar, and just do another quick sound check.
Yep, testing 1 2 3. Testing 1 2 3.
Yep, hear you fine. Philip, obviously I've been talking about a long position here in the Swissy, which is pretty obvious today, and we talked about the energy in volume. Now, as you know, we're shortly going to be going on television, doing a program on VSA, and as we mentioned today. Now, one of the things we're going to focus on is the energy in the volume. Can you just describe to those people who are new here, there's a lot of them, and I know we've got some people in here from one of the TV stations that we're talking to. Why is volume and energy so connected when we talk about price action?
Well, when you're looking at the market, what actually controls the market is the buyers and sellers. Now, that seems an obvious statement, but buyers and sellers are really supply and demand. So you've got buyers coming into the market, which will push the market up, sellers coming in, which will push the market down. What's key, though, is to understand how the interaction between those buyers and sellers actually works. Now, if you look at most bars, it's very rare, unless it's a very thinly traded instrument, that you'll see all buyers on one bar or all sellers. Normally, there's a combination. So what you're looking at when you're looking at the chart is to understand what the interaction is between those buyers and sellers. In other words, which one of those two parties gets control of the market at that time. Now, that will normally be decided by what's happened in the past, which is why the background or the previous bars on the chart are so important. When you see a long period of falling prices, and then you see accumulation taking place. Now, accumulation is essentially where the market's been marked down heavily. Sellers capitulate, effectively they just give up, sell at any price. Buyers then come in en masse and start accumulating. Now, you see that, but a market can't rally necessarily straight away, because the market has to be sure before it goes up, and this is where the professionals have to know what they're doing. They're not going to let that market go up until they're sure that all those sellers, all that supply has now disappeared. Now, the way they do that is by marking the market back down again into the area where you originally saw the buying. If volume is now lower, and this is the key where volume comes in, if the volume is lower, it tells you there are now less sellers at that level. And they'll often do that several times. And each time the volume is lower, it's suggesting that the market is becoming stronger. But the key, as Gavin pointed out earlier, is that you must wait for price to move above the top of the accumulation zone. Now, the top of the accumulation zone is the first bar where very high volume came in that downward movement. And if you mark the top of that bar, once price pushes above the top of that bar, you're then looking for it to be marked back down to that level again and test. And once that's happened successfully, you're then in the bull market. And that's essentially how the markets work.
Now, Philip, we called this emergency webinar because of the trap up move that happened at Brexit. So let's move on to that now, because I've drawn on here some trigger nut bars, which are already automatically drawn on by the software. But can everyone see my weekly chart of the British pound US dollar, GBP USD? Can you all see that chart first of all, before we start going into it? Okay, a resounding yes. All right, let's start with this price bar right here. Now, if you all look at the volume at the bottom of your screens, right, you can clearly see that the volume is absolutely enormous, right? There's no doubt about it. It's absolutely, you can see there, I've put a line across it. Absolutely enormous. And up here we have an indicator, but the volume is the highest on the weekly chart. You can see here it's not even been touched anywhere to the left or the right. That was, of course, the week that the United Kingdom voted to leave the European Union, Brexit. Now, Brexit to me, now I'm so sick and tired of hearing it, it sounds to me like a breakfast cereal. I think someone's got to invent a breakfast cereal called Brexit. They'll probably make a fortune. But in this country, we're tired of hearing about Brexit because all we get is mixed messages, confusion. No one seems to know what they're doing. The politicians don't seem to have much of a clue. However, for traders and investors who follow this particular instrument, and also in the US where you've got some volatility in the stock markets there because of Donald Trump and all the negative news that's coming out, all this news is creating massive volatility. But we're now in a very, very important zone right here. And that zone is right in between the closing price at the bottom of this bar. So if I now left click on this bar, I'm going to bring Philip back in to talk about the importance of it. This is known as an engulfing bar because it wipes out longs and shorts at the same time. Anyone close to the market here on that week could not have got any money out of that trade. But the week after, and in fact on this bar here, where I went short, there were some very good opportunities, and they're coming back right now.
Sign of strength has arrived.
Okay, lots of alerts going off still, but we'll come back to that. So here we have a trap up move. Now, if I left click, it tells me it's a sign of weakness, SOW. So we have two types of indications in the software. We have signs of weakness and signs of strength. Signs of strength work better in uptrending markets. Now, when this started to rally into this area, we got everything turning green on the weekly chart. We got our signs of strength. You can see them here, the test. You can see them here, over here. No supply. This is why it kept going up. So in a bull market, you look at the weekly chart first, you get a very clear indication of the direction it's going in. But then look at the volume as the market reaches the 50% Fibonacci level, where my line is. Now, that's something I don't talk about publicly very often, but I'm going to do it today because it's part of our alert service. We've added in the 50% retracement line of the trap up move. When it gets there, and it will get there most of the time, we start to see signs of weakness appearing. Now here, we had selling coming in. You can see the volume is increasing into the 50% Fibonacci level, but we close in the middle with the next week closing lower. And what happens with the market, it doesn't immediately take off to the downside. They have to chop it around for a few weeks, but this bar was a real clue. This bar here, without any indicator on the weekly, but on the daily it had several, was effort to push the price up. The result, it closed on the low into the area where the selling was. Now over here we had more sellers. Now this confuses many traders who are using a MACD, a stochastic, a moving average. They say, hold on a second, Gavin, the market's going up, my MACD says buy, my stochastic says buy, my moving average says buy. Even my candlestick says buy because it's using the past price. And you see the volume surging and the price going up. And you think, oh, time to get in. And just as you get in, you lose your account or you get your backside handed to you on a plate. Philip, Tom Williams, the late Tom Williams, who passed away in 2016, our mentor, taught us two golden rules. The first one is when weakness or shorts are setting up, happen as the market's marked up on extremely high volume, as we can see here. And secondly, he taught us that we trade when the market changes behavior and we look for signals, indications of weakness like we see here. The upthrust in a downtrend, which we had over here about 3 or 4 months ago, is one of Tom's favorites. So Philip, I'm going to ask you, because you've written about it in your book, and by the way, for those of you that haven't got Philip's book, I'll talk about it in a minute. It is the place, I think, to start. If you're new to this, Philip's written 2 books. His first book is a very long book. The second book is much shorter. If you're new to it, that's probably the place to start, to get you into the theory behind why smart money have to sell on the up moves and buy back on the down moves. So Philip, Why is it then that we have selling as the market's going up, but we have to wait until the market changes behavior to get our trades? And the key to it, I believe, is patience. A lot of people aren't patient. They try to get in too soon. Why is it, Philip, that weakness, when it appears on up moves, and strength happens, and buying, as I saw in the Swissy today, happens on down bars?
Well, there's a very simple answer to that. If the professionals, who are the very large investors, want to buy a stock, let's take a stock as an example, and they want to accumulate or buy a portion of a stock. Now, if they buy it on up bars, the price is just going to accelerate away. Because
Philip, sorry, can you define what is an up bar and what is a down bar in VSA? Because a lot of people ask me that. They say, you and Philip keep talking about up bar, down bar. What the hell are you talking about? So let's be very pedantic. How do we define an up bar to start with?
Well, an up bar is a bar which actually closes higher than the close of the previous bar.
Like here?
Yes.
So that's the close of that bar. It closes with that little tick. And there's the spread of the bar that we refer to, which is the higher the low. So the next bar is defined as an up bar, Philip, just to be clear, because it's closed higher than the close of the previous bar, correct?
That's right. It's the little tick just to the right of the bar, which indicates the close.
Yeah, let me just point that out to everybody so you're absolutely sure. So there's the little tick, it's the closing price of the bar. So we've gone up on an increase in volume, we've closed here, and the next bar goes up, but it closes higher than the close of that bar. And we define that in VSA as an up bar because it's closed higher than the close of the previous bar. But Philip, we also look at the spread and where it closes in relation to the range of the bar, which is, and they call that the range in America, we call it the spread, which is the high and the low of the bar here. Now, in this case, we closed in the middle with the next bar closing lower. Why is that relevant?
Well, when you're looking at VSA, there's the three elements. We're looking at the volume, or the activity that takes place in a bar. We're looking at where the bar closes, and we're looking at the spread or the range on that particular bar. So we're looking at all three. And you analyze each bar using those three items. And you're also looking, comparing that to the background of the chart. That's all the bars in the background. Because what we've got here is we've got price being marked up. Now, if I just come back and answer that question you asked me earlier, Gavin, about we're talking about up bars and down bars. A down bar is the opposite of an up bar. It's a bar which actually closes lower than the close of the previous bar. Which highlighted that. That's lovely.
Then there's a green signal there, and the volume is low on the down move because we're trending up. Everything in the software is telling us we're in a bull move at this point because they're going to come and re-go into this area, which they did to the 50% retracement level, which you can see. If you got the top and the bottom of that bar, that's a 50% line. It's a Fibonacci number, and we hit it over here. We close just above it, and then here we hit it to the tick, and we take off to the downside. If you can read the chart, you can speak the language of the smart money, right, Philip? Would you agree with that comment? You're reading the language.
It's lovely to read it, and I'll use the term that Tom used to use. It's like reading a sheet of music. I mean, I love listening to music. I'm not a musician. I can't play any instruments. But to sit and listen to music, I can really appreciate it and enjoy it. But I can't read it. Well, I can read a little bit of music, but not. I've never been to play an instrument. But with these charts, I feel it's almost as if you've got a sheet of music in front of you. You can read every bar that's on that sheet. And when you put the whole thing together, it's like putting a jigsaw together. It fits. And it's a wonderful thing when you can read it all together. But coming back to your earlier question, Gavin, about why can't professionals buy on bars that go up? If they did that, price would move so heavily against them that they would pay dramatically higher prices and would quickly go out of business. Equally, if they wanted to sell, they're not going to sell once the market started to fall because their selling orders would be so great that the market would simply collapse under the weight of their selling pressure and would literally, there just wouldn't be enough liquidity in the market or buyers in order to absorb their selling. And equally, if they tried to buy into a rising market, there wouldn't be enough sellers to accommodate their buying, and price would just go through the roof. So that would not be good for their business.
Perfectly explained. Now, we're looking at the trade that I'm currently in, and we're going to have Gregory come in and talk about these trend clusters, which I use to trail my stop. I've been trailing it for most of the trade. Now, Philip, sometimes we get very high volume bars like this, and it breaks through old areas of resistance, and there's red signals there, but the market fails to change behaviour. In fact, it comes down and you get strength coming in. This is a 1 minute time frame I'm on, no supply. So sometimes what we see in a strong market is it goes up, but look at where the closing price is on this bar. That's why I stayed with the trade, because actually we've got a very strong area here where the market has pushed through an old area of resistance and is moving up. Now, so Philip, can you explain that? Because Tom, I always know that if I see a price bar that closes near the top, even if it's got a red indicator on it telling me there's potential supply in these bars, if they test this area, which they've done multiple times, we're going to go up, which is why I'm still in the trade. Now I've got my stop now. It's just these trend clusters have moved. So now the stop was where the last cluster is, and it started to push up because the clusters, which Gregory will explain in a minute, are now right below us. And this is a live trade, by the way, guys. I'm not on a PowerPoint. So you can see the logic behind it. It's real money. It's a real trade. We're attacking the old top. Philip, why do these bars here confirm when they're tested at the top of this bar that the market's going to go potentially higher?
Well, when those bars are pushing up like that, what's actually happening, if you look at the volume was fairly high on that bar. So there are some sellers in there. But what you've got to ask yourself is not are there sellers, but is there sufficient buying in there to overcome those sellers? Because when you're pushing up through an old area of resistance, which is a level where price has failed to push up through in the past, it takes effort. And that effort shows in the form of volume or activity coming in. So you'd expect the volume or activity to be higher as it puts in the effort to push up through there. It's like running up a hill. You have to put in more effort than if you were just running along on the level. And
there we see it right there live. Okay, so you can see this, guys. So basically, we've come through the area of resistance. We've been tested. We've got strength coming in. Okay, now what I'm going to do, we've closed up on the top of this bar here. We're still long. I'm at 50 pence a pip here. So basically, very nice trade. Let's now manage the trade using the trend clusters, which Gregory will show you. Now, these are all part of the trading alert service that we send out. So what we'll do is we'll take the stop just here, and we will now move it to the next cluster, which is learning itself. They relearn themselves, which you'll understand shortly. Now, Philip, before I bring in Gregory, who's massively improved these trend clusters, massively. You used to use them years ago for trading stocks, but they were represented in a slightly different way. Can you explain how important these trend clusters are when you're in a trade, you want to lock in profit, you've got into a position, this shows you where clear resistance is. We've got a cluster right above us now, look, just appeared. It's this orange button that you see, this I don't know what you call it, a diamond I call them, but you've got two below us. So this is the area that the market's going to, now there's a purple one just appeared. See these? They've all relearned themselves. If we're going to push through them, and you can do on a small time frame, we need an increase in volume to push through. If we see low volume at the cluster, it will retrace. Okay, it doesn't matter to me because now I'm going to move my stop to the next purple cluster. And this is something that Gregory's taught me, using the trend cluster to chase the market, knowing that here, to come down here, there's a lot of support below me. Here, where my entry was, it's still there. The support level's there. It's like drawing trend lines. Let me ask Philip, how do you define trend clusters in your description? I know when you were managing your fund, you use support resistance all the time. This is a very simple way of seeing it, and it works, as we can see. We're bouncing off the cluster right here at the right edge. How do you define them, Philip?
Well, you're right, I did use support and resistance a lot, and I found that support and resistance used in combination with VSA was a very, very powerful tool indeed. But I didn't have the ability way back in the early days to produce trend clusters until I bought the VSA software. What I used to do was to draw trend channels and trend lines, and I used to look at where particular trend lines crossed over. So if you've got a line going up and a line going down, where they met. And I used to call those energy points. There was a particular definition of it. That was just something I'd noticed, that quite often when the market reached that crossover point in time, something would happen. Either there'd be an acceleration in the market or it would correct. So I understood there was something in it. And when I first bought the VSA software, or Genie Charters as it was then, in the early days, Tom Williams actually did have these trend clusters put in. They were done in a slightly different way to how Gregory's done them. But I could see the benefit of them. And of course, Gregory has now dramatically improved them. And I believe Gregory to talk about that.
Yeah, we'll come to that. Now, let's have a look at what's going on here. So as we look at this, is a 1 minute time frame. I'm only using it. I tend to use these on bigger time frames. But for the purposes of a 1 hour webinar or 1 hour, 15-minute webinar, which we're doing here, these are now very integral to my trading strategy. And more importantly, they're very, very useful when you're trading stocks on the bigger time frames, because they do act like a brick. Now, you see here the volume starting to push up. We're starting to push higher again. The cluster just relearnt itself. It's now in the middle of the bar, and we have a grey one above us. But overall, if we look at the trend, we're now pushing up. We're making new highs. Okay, so what I will now do, you see the old resistance point here. I will now move the stop through to where the previous level was, where we had a problem there. And now I've locked in more profit. And that is the system that we teach, which is stop to break even. Here was my entry. You can see where it was at 100,980. You can see for yourself how many pips that are involved in this trade. And again, on a bigger account, obviously we trade bigger size. This is just to show you that you can do it with a small account, okay? You don't have to have a large account. When I say a small account, I'm talking about £1,000. You can trade. I don't suggest you trade Forex with anything lower than that. And ideally, you should be trading with a £5,000 to £10,000 account to be successful. Most of the traders I see that are trading below £1,000, they can't put stops in, you know, they're so tight to the market because of their risk reward that they keep getting stopped out. So I prefer to take lower size and bigger stops. So basically, I'm always within, in this strategy, 2% of the risk capital in the position. Once I've got through to break even, as I have in this trade, I look at the clusters to guide me where we're likely to go. Now, what I'm going to do, when I bring Gregory in shortly, we're going to look at each indicator. Now, here we've got a down bar. The volume is less than the previous two. The cluster is here at the moment. But what I want to see, I've got my stop. I'm not going to lose any money. The stop is at the previous reaction point. Okay, this is where it reacted negatively. That's where the stop is. If this market comes and takes me out of the trade, perfect. There's a saying that Tom taught me. He said, Gav, you never went bust. You never go bust as a trader making profits. You don't. And so one of the key strategies here is once you get a move in a market, and it's all been set up, by the way, from our Smart Center Pro technology. All of the trades I've taken today have come from Smart Center Pro. And those are the trades that we'll be posting in the new Trading the Market service. They're all based on the Smart Center. To answer the question that came in from Doug earlier, they're all based on the new system 4.7 using Smart Center Pro. So if you can't afford the $30,000 price tag of Smart Center Pro, then go to tradingthemarkets.com. It's much more affordable. You get the alerts. I do recommend you have our software. Now here we can see we've got what looks like a test. No supply. So we've got low volume here. Now this needs to respond positively. Okay, so this has gone light shade of green because the next bar needs to close higher, and we're in between two clusters here to confirm. This test could fail. I could get filled. If it goes through it, it'll make another new high. And we are making higher highs, higher high, higher high, higher high. Now we're testing this. That's what are we testing? Good question. That. You're testing the supply that's on that bar. And I would be very surprised if these clusters don't disappear and we move higher. This again comes from experience, but this is the experience that we bring to the table. Now, one of the things that we have in our Trading the Market service that many of you are not aware of is that Gregory, who's our Chief Technology Officer, he developed all of this, right, is running a live chat room where he's posting charts, and we've just relaunched this. Nobody's aware of it. And it's the most valuable resource that we've got. And most of you aren't aware of it, which is very sad because I think a lot of people don't get the emails we send out. Okay. Am I putting this on YouTube? Absolutely I am. Of course I am. Absolutely. Because again, I want you to learn from this. These webinars that we do in our own time, we do them free of charge because we know that you'll see the truth. You will believe, as we believe, we know that this works. Now, again, before I bring in Gregory, let me flip back to that key thing. I watched a couple of movies last night, very good movies, by the way, about the belief system and how important it is to your success in anything you do. And Philip's written about it in his book. I've written about it in my book. But I know that this works. This is not belief. I know because I've done it for 19 years. Philip knows this works. We both made a living from it. But a lot of people doubt because they've been, well, I'll be honest, they've bought a lot of rubbish in the past and they've been scammed and they've failed and they've consistently failed in the market and they lose the appetite. They say, well, I'm done. Do you know, I would say 90% of the people that buy a product fall into that category, which is sad. They've gone through it, but they know there's something that makes sense to them and is the truth. So, Philip, let me bring you in on this. I know you went through the same journey. I didn't, fortunately, but you went through a journey of consistently losing before you found Tom. Explain to those people who are new in here, and there's 2 or 3 guys that I spoke to earlier who are in here who've absolutely lost in the last year in the market, and they want to give up, but they found this and they said, is this the way to go? What's your advice for those individuals?
Well, the answer is yes, it is. And yes, I went through exactly that same journey as you've gone through. And going back, I've been using VSA now for be 30 years in December. And I don't use anything else now. But going back, I tried all the different things. I started on fundamental analysis, then I started to use Elliott Wave, then I started to use various other technical tools. And the trouble is I found I was always searching for something. It never really gave me the answer or the consistency that I wanted. And therefore I was lacking that belief. And it wasn't until I came across Tom and Tom's work. Now, originally, I didn't have the belief. I could see there was something there in Tom's work, but I just didn't have that belief. And one day I was listening to Tom, and I thought, when you listen to Tom talking, he always talked with authority, a quiet authority. And he always knew what was going to happen with the market. And I thought, I've got to grasp this, because he was proving to me by the fact he always analysed, or virtually always analysed the markets correctly. Rarely did he make a mistake. I thought, why can't I get this? And I think that was the turning point for me when I realised I had to put all my effort into this and really study it. And thankfully, I did get it. And most importantly, now I've got the belief. And I really do believe that this works better than anything else. So that was, for me, was the light bulb moment.
Yeah, belief is very important. So let's come to the clusters now, because I've got a lot of questions coming in. And George, I am going to put this on YouTube. Can you please identify a cluster on the chart? Yeah, we're in them right now, Louis. Here's the cluster, which is orange, which is not as powerful as the purple one, and we're stuck right on the cluster right now, which is why price is rejecting it. Look, we're stuck on these clusters until these now it's possible with this very high volume to push up through them, but I doubt it. These clusters are acting as resistance from this level here. Now, again, it doesn't matter for me because I'm already in profit. I'm not going to lose any money, and I've made a very good trade here. But the thing we're going to look for now is testing of this area. And if these clusters disappear, because they relearn themselves every bar in every time frame, and I'm going to show you in a minute a stop Facebook. I'm going to show you the trap up move, which is what we're here to talk about actually. But because we're in this trade, and because it is what we call absorption volume that's been tested, I thought it's a very good opportunity to show you that yes, I like looking for shorts. Shorts seem to make money quicker, but here the clusters are so obvious where they are. Now each one represents, if you imagine you were drawing, and Gregory, can you bring up when I bring you in, show me your screen where you show all the different trend lines in different places, because this shows you that a computer is very, very good at drawing invisible lines into the future and plotting them like we're plotting here. Now the cluster's just relearned itself. See, it hit it and it's bounced up off it, and now it's stuck on the purple cluster. Now the volume's coming in to push it through. That's what happens. It's like a hedgerow. If you're going to go through and punch through a hedgerow in a car, you can't do it if you're in first gear. You've got to be going 60, 70 miles an hour and punch through it. And that's what's happening. The volume is attempting to push us through this area. We can see 3 green indicators in a trend. These aren't wrong. They're telling us that on these down moves, they're testing. Okay, over here on the 1 minute chart, the shakeout, and over here, we've got right on there, the test. Okay, and that test held. Okay, because we're in an uptrend. And now what we want to see is an increase in volume, pushing us through this old level. Then we'll start to move the stop up again. The cluster is now right below us. Notice it's relearned itself. Okay, so these are just strategies to lock in profit. Now, if you haven't got the software, then these things here, they're available in the 4.7 version of Trade Guider. Okay, they're not available in 4.5. So if you've not upgraded, John, then no, you can't get these. They're only available in the 4.7. So let me introduce you all to Grigory. Now, Grigory's a trader, and he's also our Chief Technology Officer. So he comes from a trading background and then learned basically to program in stuff that he felt was beneficial based on VSA. And he joined the company several years ago now, and he lives very close to where I am here in the New Forest National Park. We're broadcasting here from Lymington. So Grigory, welcome to the webinar. If you want to do a quick sound check.
Yeah, thank you, Gavin, for inviting me here. Hello, everyone. Hello, Philip, again. And, well, a few words about trend clusters. First of all, trend clusters, in a way like they are presented in the software right now, they are not a support resistance lines. They are the spots of support resistance or points of support resistance. They are valid in a place where they are drawn only. They are not valid in the future. They are not valid in the past. So they are valid exactly in the place where they are drawn. On the drawing is based on the interaction of trend lines. What we are building from the background of the charts, from the left side of the charts, and they are relearning themselves, redrawing themselves, recalculated on every new closed bar. And that's the reason why they are drawn on unfinished bar. We've been talking a lot about closed bars, and the VSA works with closed bars only. That's true. Trend clusters are a bit different. They are showing us the spots of support resistance on unfinished bars, and they are giving traders great possibility to estimate stop losses and take profits. We are dividing trend clusters to 3 major groups. Normal trend clusters, the one we are drawn by great color, you can see Gavin's chart, 2 of them above the price level. Usually price, if it's touching those trend clusters, stays on them or around them for a couple of bars, or as Tom was always saying, price is resting. And then continues move in the same direction. Second group of the clusters is the strong trend clusters, which are colored here by orange, and we can see here at a level of 0.1120 exactly. Thank you, Gavin. Those clusters usually attacked several times before they are broken. Price is reaching those clusters. It can go through, then return back, again touching the cluster, again getting back to the same to the previous level. And if we will see increase in volume, then those clusters will be broken. And then finally, we are coming to the last group of the trend clusters, which are ultra strong trend clusters. They are colored by pink. Those trend clusters are
Sorry, do you mean, Gregory, can I correct? Do you mean purple? Not pink, purple.
Oh, sorry, purple. Well, it depends, Gavin. Depending on.
They're both strong. See them here.
Yeah, here you're right, and if, as far as I remember, they are purple. They are pink in the trade station.
Right. Okay.
So, anyways, they're purple or pink colored. Right. You're absolutely right. Sorry for that, guys. Yeah, you failed. And again, if you will return back for a couple of bars, you've seen exactly in the price level where the blue bar was trend cluster.
Right there.
Yeah, at that point, yeah, it's learned itself and it's back at the same level. So those trend clusters are ultra strong. And in many cases, and I would say more often than not, price reverses on those trend clusters. It requires huge effort to break that level, huge effort. And as you can see, at the time when this blue bar, 4 or 5 bars back, has been drawn, the volume on this bar is not that big. That's the reason why the cluster hasn't been taken. Look, now volume is increasing, and if we will touch this trend cluster, it might be the point when the price will go much higher. Look for the volume. It's they are preparing themselves. Yeah, but the cluster has disappeared. You see, the cluster has disappeared. Anyways, it's not necessarily mean that we will break the trend cluster. Gavin, your screen has disappeared.
No, I'm going to put it onto another screen for the second. Just bear with me because I want to show something now, which you should all be able to see. Because we're talking about trap up moves. You should be able to see my Ninja Trader chart. Just had an alert come in, actually. Okay. So, sorry, Gregory, carry on with your thoughts on the trend clusters.
Good. So, generally, that's it about trend clusters. And we're just one thing to add. We are always asked why they are working and how they are working. Why they are working, we can answer, let's say simply. Our tests have shown that trend clusters are drawn usually in the order flow. There is a big set of resting orders, which are used by traders to put the stop loss and take profits, or just the trades. So that those areas, they contain huge sets of the resting orders, and because of that, it will be very difficult for the price to go through. That's actually what we've seen practically. In theory, I can't explain that. Most probably it's something related to psychology of people which are setting up their stops and profits just below or a bit higher than the peaks of the price or waves. I don't know. But practically, we can see a huge sets of the orders in the areas where trend clusters are located. Sometimes you can see the charts without trend clusters, like this one. There are no trend clusters, and it may happen. It means that either the price in a very strong trend, or there's simply no places for the stop. I mean, there's no clear support resistance levels. That's it. Back to you, Gavin.
Gregory, thank you. You can see some alerts going on at the moment. I'm just here on the left. Let's now talk about the trap up move. Now, the questions come in, which I knew it would, about, okay, you're using a 1 minute time frame there to look at charts. Well, that's because there was a trade there that I'm managing through to a profit. Now, let's look at the stock alert service that we've launched over the weekend, and let's look at the sort of things and the setups we're going to look for. We're going to talk about an alert that went out on Facebook, and you should all be able to see my screen. So let's start with that. Can you all see my screen here of Facebook in using Ninja Trader 8? I'm using here. Can you all see that? And then I'll answer some of the questions that have come in before I show you what the new alert service does. Good. All right. So this is Facebook. All right. So been in an uptrend for a long time. We've seen that. This is a weekly chart. I'm using, as you can see, NinjaTrader 8, the new version, 4.7. We've been going up. We've been going up. We've been going up. Then we came back down here on very high volume. We found a test down here, and then it rallied. But then we had the news. I think it was Cambridge Analytics or something like that. There was some negative news. And lo and behold, we had a trap up move right here on the weekly chart. Now, look at the volume associated with it. Absolutely enormous. Now, that is just a warning sign. That is not a setup at all. Okay, at all. That is just a warning sign that there is a trap that's been set. But it's a weak bar because of where it does it. But what it happens on the weekly chart, it breaks out to a new high. And a lot of the traders that are long add to their positions over a period of the week.
Strength has arrived.
And this is a great opportunity for professional money, the smart money, to take a big profit. So they then slam it down. And anyone that's still holding on for dear life, for 2 weeks, they mark it up. But now look here. These are confirmed signs of weakness that change the trend of price. And this is exactly what happened. The upthrust. The upthrust. And on the daily chart, okay, and on the 4-hour chart, these all turned red, and on the hourly, well before the daily chart changed. So, and the weekly chart changed. So we were giving short alerts, and we will give more alerts on all of these instruments. You can see at the moment, I've got Apple, I've got Netflix, I've got Google. Apple potentially could have a rally. So I'm watching it very carefully. But we have now added to our Trading the Market service stock alerts. Now, a few weeks ago, we had a signal that came in based on what had happened here. Okay. And then this reversal, and then what happened here 2 weeks ago. And that was in exactly the right place. What are they testing? They're testing this area. Almost to the tick. If you were to draw a line across it from this bar here, and you draw a straight line across, that is the area they're testing, where the high volume is. Okay? Ultra high volume. This is why Facebook could now rally back up to the top of this bar. And that's the exact alert that I'm looking to send out. If this week we close up near the top of this bar. So let me explain how it actually works. So let me go to the website. Okay, now this is not Trade Guider's website. Please keep this in mind. It's a separate website, so you can't log in with your Trade Guider login. This is a new service. We've had it running for some time, but we've added some things to it. And I want to show you what they are, because there's a few things that we've done, and we've done a lot of research through surveys asking what people are looking for from an alert service. Now, what is an alert service, first of all? What it does is it takes the knowledge and the VSA indicators that we've got, and it puts them into a place where, instead of you having to do all the work, the software and our scanners do it, and then we look at it as well. Now, let's start off with the alerts. This is called tradingthemarkets.com. Okay, it's a website that's owned by Trade Guider Systems International. So it's solely owned by our company. But this is different from Trade Guider in that we are giving you alerts based on strategies that we currently use, which you've just seen me use, in fact. And we're then sending them out now for stocks, as you can see, the stock scanning service, futures and Forex. And we're covering the Australian, European and US markets at the moment. Let me show you how the alerts work to start with. Now, these two alerts here are Forex and futures, and they're now automated by the software. There's no videos that come out, so they're completely automated. And this is what they look like. You can see it here. So they come out, they give you the instrument, the software looks at the potential opening price, what the stop loss, and again, it's a suggested stop loss. You must always remember that you need to put a stop loss in that meets your trading criteria, which should never exceed 2.5% of your risk capital in any one trade. That's very important. You do not want to risk your risk capital of more than 2% in any one position. And when that happens, and when you get a situation, you get an alert, it's incredibly important to actually read the document that was written by Grigory that goes with these alerts, because there's an instruction manual. And I found one gentleman who was using it, said, well, I haven't got time to read the manual. If you haven't got time to read the manual, don't trade, sir. Give up. Because if you can't find time to learn to do this properly, go and play golf or go and do something else, because you won't make money. There is a very detailed manual that explains exactly how these alerts actually works. Now, these are for futures and Forex, but we have added now a stock scanning service. Now, this is based on our Prism strategy. You do not have to have the strategy to learn how to use this, but it helps if you have the software, the base charting package. And you can now get this as part of the Trading the Market service. Now, that you can read this at your leisure. I'm not going to spend a lot of time in it because I want to finish this in the next 5 minutes. But we also have introduced the Squawk Box. Now, what is this? Very simple. If we are trading intraday in futures, Forex and stocks, and we see the bag holding setup, the end of a rising market, the professional buying, the key setups that we trade, if you've got your computer switched on, or even your Apple iPad or your Google phone, you'll be able to hear exactly what we're doing. It doesn't go off every minute or every hour. It depends on what's happening in the market, but it's a much quicker way to actually understand that there is a trade there right now. Because one of the problems we had with the video alerts that we did was they were delayed coming through the email. So some of the alerts were missed because of the delay in the email. So most importantly, what we want to do now is increase the educational side by going to the Traders Lounge. Now, this is run and monitored mostly by Grigory, who is by his computer from midday UK time through to around 5 p.m. Now, this lounge gives you the opportunity to connect directly to VSA experts, including myself, because I'm in there sometimes. But Grigory is also trading his own account. So the quickest way to learn VSA is probably in the Traders Lounge, which we're relaunching over the next 2 days. So Grigory, bring you back in on this. You monitor that lounge pretty much all the time now. And what is the purpose of the lounge in your view? How can it help someone to learn and understand VSA?
An idea of the lounge is to answer the traders' questions, which are deriving from using our software, from the trading itself. I mean, we are trying to support the trader because it's sometimes it's quite difficult to understand trading signals. Sometimes it's difficult to look around all the instrument in general, because most of the traders, they are just watching one time frame. So we are explaining different interactions of the charts. We're explaining what VSA indicators are doing. Some people, they are using pure Wyckoff method. They are posting charts and explaining what they can see from other methodologies. Well, it's a quite wide range of the things what we are talking. Of course, we are posting our trades, not in real time. I mean, we are posting them after the trades are taken already. We are showing how we are managing the trades, but it's not a trading room. It's an educational resource to answer your questions mostly. And why we are posting the trades, because with the trades we are explaining why those trades we're taking.
That's the most important part, is why has a trade been taken? What is the setup? What does it look like in real time? And then, yes, there's a slight delay since when we take them. But remember, these alerts here are in real time. And it's vital that you read the manual that goes with those alerts. And I highly recommend, if you're thinking about this, because I'm getting a lot of people on live chat asking questions, we are now making the software, the base level software, available to you at special pricing. Okay, now this is the charting package. It's optional. You don't have to have it, but we highly recommend you do. And it gives you not only the training that goes with it, but the software that we use. It's not Smart Center Pro. It gives you the scanners that you can use, that we use to confirm the trend that I've shown you today. And of course, it gives you the VSA software tools. Now, back to the trap up moves. And I want to bring in Philip here. And
Sign of strength has arrived.
Funny enough, Philip was just talking about, I've got exactly the same chart as you, Gavin, but we always have that. Philip, can I give the screen to you? Can you talk now about some of the setups to go short using, and we can talk about stocks, we could talk about futures, we could talk about Forex, but let's talk about the actual setups that we like to see based on unusually high volume, Philip.
Yes. Do you want me to talk about trap up moves?
Yeah.
In that respect? Right.
Because they're the ones that are making a lot of money right now. So I think they're the ones that we should just zero in on, because they're the ones that we're going to see a lot of alerts on, especially with the GBP USD in the coming few weeks.
But I did have a look and see if I could pick up one or two trap up moves. These haven't all got indicators on, but if I start with, I've tried to pick ones that have occurred within the last 100 bars or so. So I've gone through one or two of the Dow Jones 30 stocks, and the first one I picked out is Cisco Systems. And if we go back here to, this is one incidentally that did work very, very well. I'll explain why. So it's on the 3rd and the 4th of December. Now, on the 3rd of December, price got marked up. Now, you'll notice on this chart, I've got two red lines here. Those two red lines are drawn from a bar in the background, which had very, very high volume on it. Now, the reason I've drawn it from that bar is because if there's very high volume or a lot of activity on that bar, when price pushes back up to that level, that will act as resistance. So we need to understand that. So we're using support and resistance first of all. As price is marked up, you notice the first bar is marked up and it tells us that weakness has appeared. So we've got an indication of weakness already. But look at this next bar. Now that is a lovely trap up move. Price has been marked up initially to new high ground and has collapsed down to close on the low. And what you've essentially got there is actually a two bar reversal. A trap up move is really a two-bar reversal, often a very, very extreme one. This isn't quite so extreme as one or two of the ones we've seen, but this is nevertheless a very significant weak bar. But more importantly, it's occurred where we've got resistance at previous levels. So you can see here we pushed up and there was resistance at that level. Here we pushed up and we've rejected it. What we're looking for now is for price to push back up again to that level of low volume. And we get exactly that here. So what we've got here is a little bit of selling, and then the market gets marked down sharply on the trap up move. Price is marked back up to that level. Volume or activity is now very low. If it's low, you remember we said before, if you're pushing up into an area of resistance, it takes effort to push up through there. If we have very low volume, which you can see at the bottom here, is coloured pink, it's extremely low. There's no effort to push up through there. There's no energy to push up through that resistance level. And that's the reason why price falls off until we get some buying coming in. Now, over to the right, we did push up through there eventually. We actually gapped up and we pushed up. And then there was a bit of weakness as we pushed through there because of the energy created in the volume. But that got tested. And we got there no supply. And that allowed the market to continue to push up. Now that's the first one, so that one was a very good one. Microsoft is another one, which is pushed up. You can see the first bar pushes up, closes in the middle, and it's having 2 or 3 attempts at this similar level here. Market then collapses down on the low. It's not a traditional trap up move, because normally the trap up move actually pushes up above the high of the previous bar, but it's a similar to trap up move, and the market's marked down heavily on this bar with slightly increasing volume. It gets marked up again on low volume. You see it's covered pink. It's much lower as it gets marked up to the area of this bar, and then price falls sharply, and again until we get some buying coming in down at the base. The timeframes on these two incidentally are quite similar, because It was as we were marked down into the buying that occurred just before Christmas. Now, Pfizer, the third one, this is one that didn't work. And I thought it's good to put one in that looks like a trap up move that doesn't work, and explain why. Because the market here has been in a solid uptrend. We had some high volume here as price was marked up. And remember, Gavin was showing you this earlier, where we've got a widespread up bar closing right on the high of the bar with high volume. That is actually tested here, and the market continues to move higher. But as we move higher, we do get, let me put less bars on this so this is a little bit clearer, because I'm aware sometimes when this comes out on the recording, it's not always very easy to see. So let me just work my way back a little bit to that bar. And I've lost the bar now. So what I'll do is I'll go back to the 200 bars. It was it's this bar here. So it's the 27th of August 2018. So I can go back to 100 and then highlight that bar. So we'll go back 22nd of August is this one here. So we've got our uptrend, good uptrend. Do we see any significant weakness here? No. There's a little bit of supply there, which got tested. The market tried to put up. We got a little bit of weakness coming in here as well, nothing significant. And then we get the market marked down sharply. Now, when you get that coming in without any really significant weakness in the background, you need to be careful. A true trap up move should have weakness in the background, not a solid uptrend with just a little bit of weakness. And you can see actually a few bars later, we got a test, which is a markdown in price on low volume, and the market then continued to push up through that level until we pushed up to here and we started to see a bit of weakness coming in again. So that's one that doesn't work. Now, I won't cover Facebook because obviously Gavin's covered that. So any questions on that, Gavin?
Let's have a look. Any questions for Philip on that one? Before we, let's see if there's any questions from everyone. Now, I know there's a couple of people who've just tried to sign up for the Trading the Markets alert service, and the PayPal link apparently has got a problem with it. So I'm going to give you an email address. If you want to sign up, I can send you a direct PayPal link, and you just email, it's my wife Laura, tradeguider@outlook.com, and there is a 30% savings on the yearly and a 20% savings, I believe, on the quarterly pricing. So to get that, don't try and order from the website necessarily. Just email Laura Woodham Holmes, which is actually my wife. She looks after our sales support. Okay, and her email, well, it's the easy one that goes to all of us, is tradeguider@outlook.com. I'm posting that in the room now. And in the subject line, just put Trading the Market, and then we'll set you up tonight. You can get the alerts first thing in the morning. Now, we've got 2 alerts going out, I can tell you, tomorrow. One of them is on the British pound. And I'm not going to say which direction right now because it hasn't confirmed, but it's looking very interesting. Grigory, anything you want to add to what we've said here at the moment before we wrap this up?
Not really. That's actually it from my side.
Okay, we've got a potential weakness just arrived on the Swiss franc, the Swissy and the USD, funny enough. So now it got marked up, it hit that trend cluster, and it got marked straight back down. So that's one you want to watch as well for tomorrow. The Squawk Box starts tomorrow morning. I will send everyone an email that's, I've seen a couple of you just signed up. I will send you an email, or we will, the company, with your login details so you can log in first thing in the morning. There's nothing happening right now tonight, but first thing in the morning UK time, we'll be sending out alerts. Everything else is automated. It runs all night, right, Grigory? So the automated alerts are going 24 hours a day, correct?
Yes, they are, except Saturday and Sunday.
There you go. So the automated alerts, you can look at them. They work all the way through the trading week while the markets are open. And at the moment, they're Forex and futures, but the stock scan with the stock results will be sent out tomorrow afternoon for those of you that have just signed up. All right, let's see if there's any further questions. Philip, any final words from you?
Nope, I don't think. Well, the only thing I would say, we talked a little bit about belief, and I also think one of the things that's very important about the markets is understanding psychology. When I first started in the markets, I never even thought about psychology. It's only the last 5 or 6 years that I've started studying it a lot more. And I'm actually reading a book right now which talks a lot about psychology of the markets. And I think it's one of the most important things, because we can learn a system, but belief is actually part of psychology. It's actually training our minds to follow the markets in the correct way and to actually believe what we see on the chart. It's so easy to look at a chart, listen to something on the news, think they must know more than the chart does, and following that. You must believe in what you see on the chart. Absolutely vital.
Totally agree. Jay, just saw your comment. My wife's just connected with you on live chat. If you want to come back on, she'll send you a direct link for PayPal. I think there is an error on one of the links on PayPal. Just let us know, Jay, which you want, the yearly or the quarterly. We'll apply the discount and send you a direct link from PayPal from another account that we use, which is working fine. In fact, we've already had 15 people go through that, so I know it works. So you'll see my wife Laura has just texted you on there as well. Okay, is this being recorded, Philip? Yes, and I'll put it on YouTube shortly. 30-minute chart of gold. I haven't really looked at gold. I'll have a quick look at it. Let's have a quick look. GC.
Do you want to take the screen back, Gavin?
Yeah, I can do. Let me just put the 30-minute chart up.
Sign of strength has arrived.
Well, yeah, I can. Well, gold at the moment is weak. It's no doubt about it. It's weak. Yeah, I'm not going to put the chart. We haven't got time because I want to finish this at 1:15. But yeah, it looks to me like it wants to come down now. Possibly to 1285 is where an area of support will be found. So yeah, it's weak. It's not strong. Okay, let's see if there's any more questions. I think we're there. No, I think we're good. So again, the website, guys, is www.tradingthemarkets.com. You can now get the software from there. Thank you very much indeed to my colleagues Grigory Margolin and Philip Friston for their contribution. Hope you've enjoyed this evening. Hope you've seen some stuff that opened your eyes. And if you're going to become a customer, we look forward to welcoming you. And to all our existing customers and users, we'll see you in tradingthemarkets.com lounge tomorrow. Remember to log in. God bless. Take care. And I wish you good trading and constant profits. Bye-bye.